Me, why are you the opinion that the gold will go to over $3,000 and it does not go, or does it go? And I'll tell you exactly why I think that. First of all, gold will go, but this is a forecast, and as a trader you need always to know a good trader is just focusing on his trading, right? The goal of trading is trading itself. It's not the illusion of making profit or where the market will be at the end of this year or maybe in 10 years. That's just an illusion. The aim and goal of a good trader is to trade good, to make that good trade. And of course, a good trade can also end in taking losses, but at the end, you will see that you have followed your trading plan with discipline. And if you take the loss, you can say, all right, we did it. Now we took the loss, move away to the next trade. And that's all. And decrease. Over the average, if you do so and you follow your trading plan, whatever market it will be, whatever time frames there will be, at the end, you make huge profits. Well, let's say now at gold market, I'm not going to talk now about the fundamentals of this market right currently. If you want to understand why I'm the opinion and why the market will go to around 3,500 a minimum and then to $3,000. And I predicted also last time we will go first down to around 1,675 because the market comes up, and exactly we did that. As you can see, we have been at around 1,616 obviously, and then the market finished the correction and we came up. So if you want to know it, go to my page, DaveBrascoFX. The link is below this video, and then you need to look for this one, gold strong buy, short-term corrections coming soon, and exactly that happened what I told you before. And there you can read all the fundamentals first, the reportings. Yes, this is the fundamental arguments why the market will do that move up, and exactly we did it. And this is the reason that the current market condition is extremely strongly bullish. But now, what happens if you have no fundamentals data, and the data and the reporting, the news are changing rapidly, right? So here's a recommendation. First of all, you have your own methods to identify the trend. If you don't have, you can go to my Tradingview and then see, okay, the update, for example, the current daily trend is bullish. The 2 hours until Friday have been bearish, but at around 4 p.m. the market changed, and you can read then the fundamentals and the reportings or the updates. There you know, okay, now the trend will be bullish. If you don't so you go to the lower time frame. We see here, for example, at 2 hours we are a little bit choppy, so we go much more deeper now. We see at 30 minutes. We see here, oh, very nice. We have here a good move, right? So I take this one. If you are a day trader, what I have been before, but I don't recommend to make any day trading because your average of losses are much more bigger than your profits, and at the end you will ruin your account. So that way we have now to, first of all, to identify some points. For example, here at $2,048 we have a peak, and then at 2041, and finally at 2023, right? This is very important for us. Why? Because from this point here at 2046, the market has been moving down. You see here, then we had already a downtrend has began. Why this happened? Because possibly the traders have been bullish taking profits. Then the fear of, there are a lot of news traders who have been feared of the market and they wanted rapidly to take profits or partial profits. Then there have been sellers who always are selling or short selling. What a terrible idea of the market, only to get in one direction if you can take two. And you see here the market moved already down. Whatever, it's important for us, first of all, to identify a part of the trend, not the whole trade, right? And we see here and 30-minute chart. So at Wednesday, 10th of May 23, the market has been started to come down. Now we have a clear direction, first of all, but if we go now to Friday, we see here at around 2000, exactly 2090 cents, the market stopped doing that, and then we had here some minor highs, and then the market rapidly started up. Okay, if you are not working with volume, then I recommend highly to work with volume. First of all, at these areas of the market has a very low volume. That means if the market comes down at around 1999, then the number of buyers is much more higher than the numbers of sellers. With other words, the market doesn't found any sellers or less sellers at this market, so the market mood changed. And we can go now to the lower time frame, let's say 10 minutes, one of my favorites. 5 minutes is too noisy for me, and we see here exactly, you see what happened here, right? A lot of people are losing in this period, right? They are scalping, going up, and then want to add because they get some way greedy and the market drops down, right? I don't do that. To me, these areas are the bull and bear traps, making you thinking that the market will go higher. So if I would do day trading, I will first of all identify all bull and bear traps. Exactly these unusual moves of the market, right? In this period, the market has right? Get here, this period. So in this period, the market has a usual movement or range, but suddenly we have peaks here, and that's a signal to me, oh, some speculators want to make me think the wrong things. And look what happened here. The market came down, came down, came down, came down, came down, and then going high again. And what happened? Instead of being bullish, the market came down, 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 right? This is 10 minutes. We go now a little bit much deeper. We see here, we have the same structure here, but very nicely, very closely. And we see here, the market is coming down. You see here? That way, without no indicator, you're going to identify the market. What do I do then? I first identify the trend, and then I do nothing. I just wait for these peaks, right? I just wait for these peaks. Because I know the market will go down or the mood is bearish, for example, what will I do? If I do trade, I wait until the market is going rapidly high, and then I look at the volume, and the volume almost is taking, if you have, for example, such of this peak, yeah, the volume will increase and immediately get followed by a red bearish volume, and then the volume will decrease. And exactly there, somewhere here, I get in the market and I put my stop loss somewhere here, right? And stay. If the market will go higher, okay, then my setup was wrong, right? But the mystical or magical word is trend, the trend. And then we see here, happen again, the market goes high. Now I can increase my position, or I do nothing. I just let the market goes down. And the market comes down and down and down. That's all about it. Trend always with the trend.